Hi, welcome back. The Indian government last night has retained its right to tax foreign investors on capital gains which they make on investments in stocks and securities in India. Now, this has been going on for a very long time and there has been a lack of clarity. It is a welcome step to the extent that it removes the doubts that were existing from time to time as to the tax treatment of foreign investors and brings them on par with the resident investors in the country. I believe that Indian stock markets are now ready to decline once again. The reasons are twofold. First is that a lot of the PSU, the public sector bank results are expected to come shortly. Along with private sector banks, many of these PSU banks are expected to increase their provisioning on doubtful loans manifold as they come out with their results. So, do expect some negative surprises coming in from many public sector banks, and this is going to come and rattle the Indian stock markets. Another reason being that the government has now, as I said, retained its right to tax foreign investors. The question that arises is not for the FIIs, the foreign institutional investors, but regards the P notes, which one really doesn't know who is the person behind these P notes. So, almost $30 billion of investments in India in the stocks and securities has come in the nature of P notes, and this is all now going to be subject to probable exit from the country between now and April 1, 2017, when the taxation regime is expected to start kicking in. The reason being that we don't know still who is behind these P notes. There's not proper clarity. They keep moving from broker to investor to back to broker. No capital gains tax is levied as of now. And if almost $30 billion exits India between now and April 1, 2017, that's quite a decent sum of money. Now, lots of questions are being arisen as to why the government now has once again tried to rattle the stock markets. Once again, this P note story has started all over again. Well, I definitely commend the Modi government to, in its bringing out such an important provision. The P note thing has been hanging fire for quite some time. It would be many years, decades, and every government, incumbent government, has been hesitant to take steps to be able to control these P notes from rotating all around. There has to be a distinct entity duly registered with the Indian authorities, and that is not the case in P notes. The government, in its measures to uncover black money, has taken one more step, and I think it's a step absolutely in the right direction. It's well thought out. And if under pressure they again roll back, it's a different story. But the stock markets are definitely expected to take this negatively. But if you were to ask me as an investment advisor, I would think that this is ultimately good for the country. The lesser the black money, the better. It enables people who have intellect, creative abilities to do better than people who do wrong things to get their way around. And any country in the world has truly prospered only when there is lack of corruption, whether there is straightforward ways of functioning, and definitely commend the Modi government for good measures that they are taking in this regard. And it is the steps to retain the right to tax foreign investors, I think, is a very welcome steps. Anyway, because of this reason, the P note reason, as also the fact that there is a probability of rising NPAs being unraveled in the PSU banks, the public sector banks, as they disclose their results quarterly results is definitely going to rattle Indian stock markets, and we are looking for a steep decline. As much as 5% cannot be ruled out. It may go even to the extent of 10% within the next 45 days. So uh, this is how I believe the Indian stock markets are expected to span out. Um, Take care, and do take that into cognizance in planning your investments. Take care. Bye. Happy investing.